Okay, the SARS income tax account, you should know the layout. On the debit side, we'll have whatever we paid to SARS. And on the credit side, we'll have what the actual tax for the year is. So on the debit side, I'll have whatever payments we made. So let's see if I can pick that up first of all. There it is. Okay. And there they tell me on the list of balance the provisional payments was 390,000. So on the debit side, I'll have payments of 390,000, and on the credit side, I will have the tax for the year. Now I know they gave me that as well, and that was 408,800. So 408,800. And that is all we need for this account, so I can just balance it. So it means that my credit side is more than my debit side. So it means that there's a difference of 18,800, and that difference is then my balance. Okay, let's just write the balance. My balance carry down, which means below the line my balance brought down will be on the credit side and 18,800. If it's a credit, it means it's a liability. Liability means payable. So it's not a receivable. So I can finalize my receivable. I will keep that in mind when I do the payables later on. So it is 317,000 minus 15,850 plus 7,950, and that gives me 309,100, which is my total receivables. Next one is the cash and cash equivalents. So if I look at the information, there's nothing under the notes, I can remember that. So there's a favorable. Be careful. Favorable is a receivable. Unfavorable is a liability. It could be on its own under the non-current or the current liabilities. And that is the only cash item. There's no floats or petty cash. So the cash and cash equivalents is simply that 250. 700, 250, 700. Okay, so I've got everything for the current assets. I must now just add them. So I will add everything in the block, the 478,309,100 plus 250, 700, and put the total at the top. And that is 1,037,800. Good. So that is the total of my my current assets. I will now I can move on. Just want to get them sorted. I cannot work out the total assets because I haven't got the fixed assets. So I haven't got the fixed assets, I cannot get the non-current assets. So I will move on to the liabilities. The shareholders' equity consists of ordinary share capital and retained income. You have done the notes, so you must put in whatever you got on the notes. So I will go back to my ordinary share capital note and go and look what my balance was there. And it was 3105000. So I must put that in. As long as you put in what you got there, you get a mark. So don't go and figure out some other figures. Use your note figures. It's 3105000. And my retained income was 219,400. So retained income 219,400. Again, whatever I got in the note. This is, if you've done the notes, it's 2 free marks. So make sure you use your figures from the note. Add the two together, put the total at the top. and that total is 332440. 23440. 4400, sorry, 3. Let's just get them sorted out a bit better. Move it down. Good. So that was my shareholders' equity, all from the notes I've done. So that those marks I must get because they were basically given to me. Okay, now we can move on to the non-current liabilities, the loan. Now, if I look at the loan, the information for the loan, they give me the statement, tell me what the balance, the payments, the interest, and then not the balance at the end. And then important, there's a note to tell me that 40,000 of the loan will be paid back in the next year. So let's first work out what the loan value at the end of the year is. Simple enough, we just need to follow a certain formula. Let's just work it out here. Okay, so the formula for the loan is we start with the balance at the beginning. To that, we're going to add the interest. We're going to deduct payments that we made, and that will give me the balance at the end. Good, so if I know that, it makes it easier. What was my balance at the beginning? Balance at the beginning, 480,000. So balance at the beginning, 480,000. The interest, it's also given. Interest, 57,600. 57,600, must add it. Then I must just remember to less the payments. Always just read careful. This is all the payments for the year. Sometimes they give us a monthly figure. Then I must multiply it by 12 to get to an annual figure. But this is the year figure. So I can simply minus the 177,600. Minus 177,600. And that will now give me the balance at the end. So I take 480 plus 57,600 minus 177,600, and that will then give me 360,000, which is the balance at the end. But I must be careful because 40,000 of that will be paid next year. So I must take out 40,000 for the non-current, because 40,000 of that is current, which means my non-current is 320. So that 360 is split between 40,000 current and 320,000 non-current. So let's show it on our balance sheet. So the non-current bit, what did I do to get to the figure? I took the 480,000. I minus the interest of 177,600. I plus the interest of 57,600, and then I minus the 40,000 that is for next year. For that it will be paid next year, and that will give me a total of 320,000 for the year. Which means if there's a block, although it's the only item, I must put the total at the top of the block. So make sure we put the 320,000 at the top of the block as well. Just move it down a bit. Good. So my non-current liabilities, 320,000. Trade and other payables, again, very important that we know what must go in trade and other payables, because there's quite a number of things that can affect this one. That's why they like to ask this note. So let's just look at a summary of what we must look for. So basically under payables, the main one would be the trade creditors, then the accrued expenses, in other words, expenses we still owe, any income we received in advance, and then these four are basically if there was a note that somebody did not, that we did not pay somebody's salary or something like that. You would also have creditors for salaries, medical aid, pension fund, and UIF. And then these two can either form part of payables or shown separately under the current liabilities, and that is the shareholders for dividends, and then such income tax if it is a credit. Remember, we calculated it a bit earlier on. So let's go and look for these figures. So the first one I'm looking for is trade creditors. Trade creditors, and there it is, creditors control 239,800. So I'll put it in 239,800. Good. Then I'm looking for, next thing, any accrued expenses, expenses not yet paid. Let's just see if there were any. Nothing on the list of balances. That's share capital, dividend, provision we've done. This was a prepaid expense, the loan statement, and income tax. So no accrued expenses. Then income received in advance. There was one on the list of balances, so I must add that as well. So it's plus that 6,600 for the income received in advance. Next thing I'm going to look for is were there a salary not paid? No, none of the notes talk about that. So none of those four will come into play. So for now, you could then add these two as well, but let's keep them separate as they gave me enough lines to show them separately. So I'm going to just add those two and put them in as my trade and other payables. So it is the 239,800 plus 6,600. Let's just work it out quickly. Okay, so good. That gives me 246,400. Put it in. 246,400. Right, so my total trade and other payables, 246,400. And we'll carry on in the next part with the rest of the balance sheet.